Thanks for joining us here as we go deep and ask the advisor, Mati Greenspan, CEO and founder of Quantum Economics and Quantum Expeditions. Yeah, they're mining Bitcoin. He's a trusted name. He's been in the space for a long, long time. So if you've got a question you want to ask the advisor, leave a comment below and hopefully we can get to it here in the days and weeks to come. Mati Greenspan, thanks for hanging out with us today. Let me ask you, it's not priced in. We've heard that, we've seen that line banted about. It seems to be the line of 2024. But what, in your opinion, really isn't priced in when it comes to the markets, to Bitcoin, and maybe, again, like the markets in general?
Yeah, it's become kind of a meme by now, right? It's not priced in yet. But according to the efficient market hypothesis, all news, as soon as it becomes publicly available, especially with the assistance these days of the internet, should be immediately priced into the markets. Of course, the efficient market hypothesis is a theory and not a fact or a law or anything like that. And what ends up happening is that, out of the millions of people that make up public markets, each one has a different opinion and different ways of assigning value to assets. So price can fluctuate based on those differences of opinions and based on personal perception of those and how it plays out. A perfect example of that is the halving that's coming up. It's currently scheduled for 4/20 or April 20th in 77 days from now. Yes, it's publicly available information that this is going to happen at approximately this time, but I don't believe that people have really priced this in because they are not necessarily either familiar with what happens during a halving or sudden supply crunch and how it affects different aspects of the Bitcoin ecosystem. As far as the broader markets are concerned, I believe that there's a nuclear event that's about to happen, which of course is the US elections, where Donald Trump, I believe, as far as everybody I'm speaking to, is going to come out with a sweeping victory. And if that happens, then the game changes as far as everything is concerned, from global trade, the war in the Middle East, the border migration, the economy in the United States for certain, Gary Gensler and the SEC. So a lot of change can be coming very soon, should that happen. ETFs are really a brilliant example of this efficient market hypothesis theory in motion. As we can see, this entire leg up here, especially as we got into December, was almost all about the hype around the ETFs. And then we can see when the ETFs were finally approved, that created a buy the rumor, sell the fact type of event, and we saw the markets sell off a bit. Still much higher than they were over the last 6 months. This blue line is the 200-day trailing average, and we're still much higher than that. But if we start drawing lines, let's say from the bottom of the market, remember the market bottom over here, and if we take a channel that we saw all throughout 2023, held and just broke out of the top in December, right? So I believe that that's probably where we might be, just coming back into this channel right now. As far as the ETFs are concerned, I do believe that by now it is indeed priced in because all of the hedge funds and all of everybody who was waiting to get in have gotten in. Everybody who is trying to get out of GBTC has probably gotten out already. So both the inflows and the outflows and all of the money moving into and out of Bitcoin is pretty much settled by now. So, markets can usually go only three directions: up, down, and flat. And I believe that we're probably, unfortunately, headed into more of a flat zone. But time will tell.
Let me turn your attention to stocks and AI in particular. Everybody's been seeing the face melting run that NVIDIA's been on. It was like at 250 in April of last year, all-time highs up over 600. But it feels like it might be getting frothy. Is this kind of indicative of what we saw in the tech boom? And are there other chip players or other manufacturers you think that probably have a lot more room to run? Let's say like TSM or AMD, and how will all that play out, you think?
Yeah, excellent question. Thanks for asking. I mean, NVIDIA, as we can see here, the blue line has even been on many time frames outperforming Bitcoin itself. Here we can see the comparison of the two assets since the outbreak of COVID-19 in early 2020. Yeah, Nvidia winning. Obviously, things change as we zoom in and out, but for the most part, yeah, Nvidia has been conquering the chip market. As far as tech stocks in general are concerned, I mean, here we can see the NASDAQ 100, which is a very tech-heavy index. And we can kind of notice a pattern here. I mean, this is, since 2008 financial crisis, I mean, things have been pretty much one direction. And then since the Fed's latest tightening cycle began in late 2021, we saw some downward movement, now pretty much a full recovery and back to new all-time highs. You can kind of use your imagination where things might be going from here. I believe it's really going to depend on the Fed and what they do. But either if we come back into the range of where it was before, if the Fed continues their tightening cycle, maybe around here, if the Fed gets really aggressive with the money printing, it could easily blast through the sky as the dollar sinks through the floor.
All right, let's pivot towards the Fed. See what I did there? Fed, pivot, and everybody's talking about the... All right, anyways, some say 6 cuts, some say 3. Obviously, it doesn't look like we're going to get a rate cut till maybe May, if we're lucky. With the U.S. debt, commercial real estate, all these loans having to be serviced at higher interest rates, is that going to force the government to print more money? And are they going to have to cut rates as a result? What are your thoughts on that?
Yeah, absolutely. I mean, the Fed is walking a very tight line over here. And even though I despise the Federal Reserve Bank and everything that it stands for, I do believe that Jay Powell is playing it extremely smart right now. In the last meeting in December, Jerome Powell basically put a top on the interest rates. So this is one of the fastest interest rate increases in U.S. history. And basically the indication is that from now on, it's going to be going downward. And the idea here is that when interest rates are declining, this is very good for the economy. And of course, the Federal Reserve is trying to give Biden a shot at re-election in November. Perhaps if the economy is doing well, maybe he's got a snowball's chance. But what happened at yesterday's meeting was very interesting because the market was really expecting not necessarily a cut yesterday, but at least for him to say, okay, we'll cut the interest rates again in March in our next meeting. But that didn't happen at all. Instead, he was held steady and said, okay, we're likely to cut later, but we need to see inflation down first. And basically, he sent the expectation, the market expectation, down to 35% chance of a cut in the March meeting, whereas previously it was much higher. Now, why this is a smart move is because interest rates in general, or the economy does good while the interest rates are declining. So if he cuts too fast, he only has a certain amount of bullets here. If he cuts too fast, he spends all of his ammunition. So as much as he can, he's going to try and talk to the markets, draw out the anticipation of rate cuts as long as he can in order to maintain the aura of a declining interest rate regime, which is why the market reaction yesterday was also very muted, basically a buzzkill, because everybody was expecting, party on, money printers starting again, and they got actually something that was a lot more reserved than expected, and actually flat markets are something that the Fed really enjoys. Less volatility is good for price stability. And overall, I do believe that's more or less what we can expect from here over the course of February, barring any unforeseen circumstances, maybe some speculation around the election, some speculation possibly around the Bitcoin halving. But as far as the Federal Reserve is concerned, they're trying to keep things muted as much as possible.
Finally, one of the biggest questions I think that's on everybody's mind, it seems to have the entire world entranced right now. How sick are you of Travis Kelce and Taylor Swift? I mean, come on, really?
Yeah, I just looked up Travis Kelce. I literally know nothing about sports. But as far as Taylor Swift is concerned, I'm going to refer to the expert on that one.
Taylor Swift is an intelligent businesswoman and a role model for young girls everywhere.
My man, my amigo, The CEO and founder of Quantum Economics, Quantum Expeditions. Not financial advice, remember, but some pretty good life suggestions. Take it for what it's worth. Again, follow along Quantum Expeditions, Quantum Economics. Subscribe to the newsletter, quantumeconomics.io. And we'll see you here again as we ask the advisor. And if you've got a question for Mr. Greenspan, drop it in the comments below and let's get to it. Remember, be smart, be safe, stack sats, hodl, self-custody your Bitcoin.